Yeah, they see me on top and they get mad cause they can't top me. Got me running up the skull when they even matter cause they can't stop me. Yeah, they see them trying to watch me and they trying to copy and it's looking sloppy. Yeah, we about to get it poppin', talking non-stop, can I get a copy? Yeah, they see me on top and they getting mad cause they can't top me. Got me running up the skull when they... Make money, make money, make money, then you take money, take money, take money.
Hello and welcome back to KSB TV YouTube channel. I'm your host, BlaKc HEXican. We have a great stream in store for us today. You know, if you're new to the channel, then you may not know that I have started a crypto wallet for the purposes of education. And a part of that, we have been DCAing weekly and trying to decide what coins we are going to go into. And so I couldn't really make a decision as far as like buying coins and evaluating good points to come into the market without getting into a little bit of technical analysis, you know, the charts. And there's no better person, as I can already see by the number of people that have joined the stream already, that Axis Alive is the guy to go to. How's it going, Axis?
Fantastic. Thank you for having me on, Kay. It's a pleasure to be here, and I hope that maybe by the time we're done here, everyone has a little bit more insight in how to read the chart.
Absolutely. I mean, I've been following you on Twitter for essentially since I got into the Hex community. And then I actually had the opportunity to meet you in person. And then that's when I was like, okay, I love this guy. You're like super knowledgeable. So a lot of times when you see charts and you see TA, you're like, oh, it's another, you know, genius nerd that I'm never going to understand. And then you meet you or you watch you stream and you're just like such easy to understand, down to earth, easy to talk to, cool dude. So I know you're the perfect person to take us through this lesson.
It makes me feel good that, you know, obviously part of understanding things on a deep level, you can kind of isolate yourself and be stuck away in your own mind. But I've always thought it was important to share that information and make it relatable and, you know, speak everyone's language. And I know that shout out to Johnny Chaos. He does a really good job of understanding things deeply, but then he relays them in very understandable ways for people. And so maybe, hopefully, by the end of this, you know, hopefully you guys can comment in the chat and like different things that you want to understand better. And just, I'm going to give you some basics on understanding time frames. That's like a big key thing. And then once you have your time frame narrowed down, then you can start to build a strategy on what you're seeing from a technical level.
Absolutely. Now, just for any of the people out there that you specifically are new to them, just tell me a little bit before you get into the charts about how you got into crypto and how that led to, you know, you really deep diving into the charts.
Okay. So my starting piece here for crypto was in mining, because I originally was more interested in the idea of legally printing money, right? So like go back to 2017, you know, I was sitting at the kitchen table with my buddy and he just says like, oh man, I really wish I would have bought Bitcoin when it was like $160 or $200 a few years ago, because now it's $1,300 and I missed the boat. And I just looked at him and I was like, damn, man, what the crap is Bitcoin? That makes no sense. And then he started to explain to me, this guy was a network engineer. He's like, well, you can actually run this code and like earn money, make money. Like, and it's just like, wait, what? And it's legal? And then it totally blew my mind and had me open up to this whole new possibility. So we get talking about it and I'm like, okay, well, how can we do this, you know, efficiently? Because I had come from a world where I was very against the central banking system. You know, I'd been awakened to the idea that the Federal Reserve isn't particularly like they're powerful, but they don't really care about the majority in a lot of ways. Like they're happy to like, you know, see short-term struggle for long-term gain. And you know, central banks have created all of the, you know, economic might in the world for thousands of years, but it always came at the expense of just the regular guy. And so this was a way for us to fight back against the elite class of people, the wealthy class, from just a regular perspective, right? And so then you take that forward a couple years. I did do the mining thing, but then I realized somewhere along there by meeting a friend of mine, his name was Bob, that there is another way to look at these markets too, which was like through the trading lens, and not just that, taking leverage in trading, but more like, longer term vision of trying to see opportunity somewhere and then taking advantage of it without taking so much risk.
Yeah, absolutely. So, do you want to bring up some charts now and like actually look at how that turned out?
Yeah, I mean, we can bring up some charts here in a second. I just want to say that with a lot of this stuff, simple analysis is always like the best analysis. Like, you can draw like a lot of complex things or understand complex models of how to check a chart or how to like see what you think is going to happen in the future, because all these things are is just forward-looking projections, right? So like one thing to keep in mind is that if you look at like 100-year cycle, and we'll go into that now. I'll pull up that chart. We'll go into like the S&P 500 or like the Dow Jones, which is the regular stock market. You can go back 100 years and you can see trends, right? Trends is like when you go out into the world and you say, right now, like bell-bottom jeans are in, but in 10 years they won't be, and then in 20 years they'll be back in style again, right? That's basically fashion coming and going in waves, but nothing is new under the sun, and everything kind of stays the same. And so the markets are the same way in that, generally more dollars are always created, and that produces this effect where markets go up forever because you're basically inflating the money supply, and you have a limited amount of resources, right? So anytime that you create something out of thin air, like this chart here, this goes all the way back to the 1940s. You can see here. Actually, I can even make it even longer.
Oh, I'm sorry.
Look this is like you can see if I just draw one trend line, like I was saying trends, that's up and to the right. And that's the S&P 500 since the 1930s. It's just literally only went up because you're measuring it against the dollar, right? So it's basically trying to show you that the economy has grown over time and there has been more value created in the economy, right? More new businesses have come up, new technologies have come up, and with that innovation and progress, the dollar valuation of those new things and new tools, new assets goes up. And the only thing that's easy to do is to print more money. The thing that's hard to do is to create value in the marketplace. And so when we're looking at cryptocurrency, we're looking for cryptocurrencies that are going to come in and they're going to change the name of the game, and they're going to provide innovation and give you power in the marketplace, right? So like in the case of Hex, you can see this pattern in this chart, and I'll pull up this one here from my Twitter. It's my pinned tweet. You can see I'm comparing Hex in pink to Bitcoin in orange, and all I did here was just take Bitcoin's price action from its second cycle, and I put it on Hex. And it's like both of them are similar in that they're both trying to accomplish this store of value narrative. They're like Bitcoin is trying to be limited in amount, scarce. It's the new money, the new Bitcoin that comes into existence is predictable, and that every 4 years, the amount that you're going to get for the next 4 years is cut in half, and then so on and so forth forever. So it gets increasingly more rare as time goes on, and that's why you see this price go up really fast, and then it creates a floor, comes back down, sell off the top, creates a floor, and then it repeats the cycle, makes a top, comes down, sells off, makes a floor, goes up to a top, comes off, sells down, makes a floor, goes up, makes a double top, comes back down, and right now we're in the process of creating that next floor on Bitcoin. So Hex is similar in that same way, in that you need to just know that, once Hex is out of these price ranges, these sub 10-cent price ranges, those prices are going to be gone forever. And if you look at the white line here, this Bitcoin fractal on it, it suggests that Hex is destined for dollar price targets, in our lifetime. And it's saying that this can happen as soon as next year, potentially, right? So nothing's guaranteed, but that if it follows the trend of what has happened before with store of value cryptocurrency, keep in mind, the only maxi that's more powerful than a Bitcoin maxi is a Hex maxi, right? So, like, we have the best community. We have, we have the best ERC20, and we have the best founder. We have a lot of the best in Hex, the best ticker symbol, the best logo.
Sure.
And so you could say all of those factors are value that's being still priced in. And as new users come in to the marketplace to acquire some of that yield that is produced from that hex contract, that'll create a shortage of new coins coming in, because the rate of inflation in hex is pretty slow. It seems like it's a lot, but you're only inflating the supply by like 20 billion per year, and at 7 cents, 20 billion really isn't that much. And most of that stuff isn't even liquid. That stuff's way out in the future. So it gives us a huge runway where price can really do amazing things in the short term. And short term meaning 2 to 5 years going into this 4-year Bitcoin cycle, right? Where they have these, because Bitcoin is the leading driver of the market. And so we're somewhat tied to what it does, but yet Hex still continues to outperform.
Right. And so this chart here, what we're seeing is looking on a longer time period, right? Multiple cycles going through, kind of explaining or showing you the comparison to say that Hex can do what Bitcoin did and possibly even better. How do we look at charts on a like a shorter time period, right? To see what's happening in the market right now.
So when I look at we'll get to that for sure. It's a great question. But I just want to remind everybody that when you're coming in for an investment purpose, you're best to serve to look at the longer time frame first. And I can't show you guys this because this is top secret, but I can show you this. Okay, so this is the monthly time frame, right? And we're going to zoom down. We're going to start at the monthly. You can see there's a clear trend here. This is your trend. If you hold this trend, you could see, let's see, the all-time high by January of 25, right? If you just rode along this line. So if the price comes down, crashes back to 3 cents, and you literally grind along this line, like by January of 25, we're back at all-time highs. But as you know, cryptocurrency does not move like that. It moves more like this, right? And so it's like way more volatile. But we can find the average price. So what we'll do is we'll get to the short-term time frames in a second. But to get to something meaningful, we want to be able to track the trend. And so one way I've been doing that in particular with the Hex chart is I connected these bottoms from Big Payday around November of 2020. And then I go to the high. And you can see that this is basically what I would call fair value for Hex, based on where the majority of the price action occurred over the longest amount of time. So what you'd say is that on this monthly time frame, this data here is undervalued, and this data here is overvalued on this longer term time frame, right? So if you're following what I'm saying, as long as price stays inside of this channel, you could be seeing $1.40 going into 2026 per hex, just on the EHEX side. Okay. So now that we know that that's roughly what we could be seeing going into 2025 and 2026, let's zoom in a little bit and look at a weekly chart. So you get a lot more candles and you get a lot more data. And when you're looking at the shorter time frames, what you're looking for is a bigger moves and that go counter to the trend. Okay. So like one thing that you want to measure in charting is support and resistance. So back here, you can see that the price never really went below this level here, roughly. And that was roughly 0.3 of a cent. And so what we could do is we could create this line here where this level was not broken on this weekly chart for 609 days. And so that meant that that was acting as support in the chart. Well, 609 days later, Pulse Chain did not launch. That's what happened right here. Is Pulse Chain was supposed to launch May of 2022, and it didn't come. And so everybody that took on way too much credit card debt and leverage to get in this hype cycle from 7 cents up to 56 cents had to sell. They were forced sellers, right? Because they needed to get some of their money back so that they'd be able to serve their payments on their debt in some cases. And so now what we're looking at is now this no longer is support. It acted as support all the way for that 600 days, but now it's resistance. So then that would be looking forward statement would be to look at that as a potential level where you'd want to sell, because it's like, okay, what was support for 600 days? Is it going to be resistance for 600 days, or how is that going to play out? And upside here, if you get continuation of the move, we're still 800% off that level, meaning we can still go up to the all-time high before even running into that long-term resistance line, right? So what was once support, once broken, becomes resistance. And that's a key thing you're going to want to remember when charting. So it isn't just a line on a chart. It represents strength in the market.
Yeah, say that line one more time.
What was once support becomes resistance once it's broken. So the way that we talk about it is, if price comes up here to test and tests it and breaks down and resumes to the downside, that means it's continuing to hold that level as resistance. But if the price can go up above, break it, retest it as support and bounce off, that is a successful break, retest and resumption off that level. Now that level becomes support, and then you can really rocket ship off those levels because it acts like a trampoline where price can bounce off of.
Yeah.
And the type of thing that, I see A-Bit in the chat, the type of thing that makes that a possibility is new user adoption. And this is why onboarding is important. And you shouldn't feel bad about onboarding because HEX already produces that yield. And as the dollar price goes up, the amount of yield that we're all producing together is going up as well. So like getting people in at under 10 cents and allowing them to ride this thing up to like 60 cents, not only are they up in returns in dollar terms, but they're also up in HEX terms if they stake their coins or they lock their coins up. And so that's important because it gives new users a reason to want to be a part of the ecosystem, because like it's not just, you're not sitting on it, holding on it and waiting for the price to go up, right? Because you can get that yield from the system. And so Metcalfe's law states that, and this is a comp sci thing where like every time that you double the amount of users in a network, the price grows exponentially. So if I pull up that chart now, I'll try to show you what I mean. Basically, if you have two guys holding HEX and they can only trade between each other, so that's like the price is like 1, right? But if you have 5 guys that can trade HEX amongst each other, all of a sudden you make 10 connection points of value. If you have 12 guys that hold HEX that can trade with each other, well, now you can make 66 different connections. So every time you add users, you're increasing the value of the network, and you're increasing the amount of volume and scale the network can go toward, right? So this increases the price because it means more people are trading, buying, selling. It just creates more value in the marketplace.
Absolutely. And what is this chart here called? Is this someone created this in the community?
This is all this is from is if you go to Wikipedia and you type in Metcalfe's law.
Okay.
It's a computer science law that basically states that when you double the amount of users, the network will grow exponentially. Almost, it can go as much as a factor of 10, meaning if we have 100,000 stakers a day and the price is 7 cents, and then we have 200,000 stakers next year, the price can go as high as 70 cents. It means 10 times the value of the network because you're increasing the amount of connections in the network exponentially with every new user. Pretty amazing
That's really
stuff.
impressive. That's extremely bullish for a community like ours, where onboarding is crazy these days. Just to see the new users. Think about like when we first got on Twitter and we're talking about Hex. Like you almost knew every Hexican that was out there, and now, like you're saying, these connections, this network is growing so large. I mean, we even see it in our events. Like we have the Hex cruise coming up. We have over 100 people just on this one cruise, right? Leaving out of Fort Lauderdale, and there's Hexicans all over the world. So you can't help but to be super bullish, on the price when you make this comparison to networks and how the impact it has on the price.
Mm-hmm. Super important.
Yeah.
And you can track this data too. You can track this data. This is a level of technical analysis that it's not part of charting, but it's important. It's so if technical analysis is looking at the price chart, qualitative analysis is looking at like how many users we're getting. So like a place that you'd go for something like this would be like hexfire.io, where you can actually find out, how many wallets are staking HEX, how many wallets are sitting on liquid HEX, how much HEX is in the liquid in the hands of the users, and how often are they willing to dump. And this is like a deeper, it takes a deeper look. But generally, I think your average user doesn't need to look this deep to just look around and recognize on Twitter that there's thousands of new Hexicans every day, and literally millions of dollars trying to get exposure to HEX. in a market where the coins are getting rarer and rarer. And this chart kind of explains this, how, right now I think there's roughly 100 million in the pools. So there's 115 million hex for sale currently. And that might seem like a lot in a number terms, but 115 million times 6 cents is $6.9 million. So when you're talking about a world where there's literally trillions of dollars, and even in Ethereum and Bitcoin, they're like hundreds of billions of dollars in market cap. It does not take a lot of money to move that like if you put in a $3 million market buy right now, the price would move up rapidly, right? Because then half of the supply would be taken off market. So we can look at that. If you want to check to see, how, if you're a big whale listening to this, or a large institutional grade investor looking to get exposure to Hex, we'll look at the small time frames and kind of give you an idea of where you'd want to buy right now under the current conditions. But first, let's just say, for simplicity, if you wanted to bring in $1 million right now, by the way, if you're just trying to bring in $1,000 or $2,000, the price isn't going to move too much on you. You're right. That's a good thing, because obviously if a price moved too much on a small guy, then that just means that there's almost no liquidity, and that would be a very bad thing. So the whole myth of Hex not having a lot of coins available to trade is a fallacy, right? So there's like $15 million of liquidity there to play with right now. And as the market grows and matures and the network effect grows, you're going to actually have more liquidity to trade, and it'll give institutional players even more ability to make quick returns. So if you did bring in $1 million today, like somebody out there would, make a market purchase, they would get, let's see, what is it, 15.6 million hex. So out of that 115 million, they'd take away like 8 or 9% of the supply. And there's rumors going around that there's people coming trying to bring $10 million, $20 million to get exposure into Hex, because they see the possibility for another big run up going into the next bull cycle. And if you are able to acquire hundreds of millions of Hex at these prices, not only will you push the price up, but then when the price holds those new levels of support, you're able to stake the yield, and then for like 30, 60, 90, 180 days, and earn a high rate of interest or a high rate of return on something that you got for pennies that's now valued in dollars. So it's eventually what's going to end up happening is enough people are going to have to chase price. And that's kind of what happened here. Was over the last few weeks, we bottomed in price at 1.7 cents. You can see down here on my left corner of this chart. And we've held these trend lines all the way up and continued to go higher and higher and higher. And this is because the people that accumulated all of the hex down here, when there was like maybe 300 million hex in the pools, they took it off the market. And so then there became a shortage. And actually the pools got down to like 25 million, 35 million hex in the pools during this phase of the price action. Right now, there's somebody selling off the price. And so there's actually more hex coming into the market supply, which is giving an opportunity for new investors to buy at a better price. And so as you come out of the bear market, there's going to be these natural cycles where the price will come back down and retrace into these lower bands. And this is where you're going to, if you're looking to accumulate, you want to try and collect coins at the best price before the outgoing market supply is gone, right? So up here there would have been like 35 million hex available for sale, but now this guy dumps the price down to here, or a group of people, and then now there's 115 million for sale. And so then we have to look at, okay, taking it a step further, where do we look for targets on price to the downside, so we could come in with some economic energy. And one way we do that is we look at the liquidity pools. And so to understand how to read this liquidity pool chart, each one of these bars represents a certain amount of dollars of tradable money. So if this is the price in red, if the price goes up, the red bar moves to the right. If the price goes down, the red bar moves to the left. Anywhere you see one of these gaps where these bars are small, there's less money for trade there. Meaning at these little tiny little bars down here, there's like $6,000, $8,000, $10,000. You get the point. And so if somebody sells down like $200,000, the price can easily slip down from the current price of 6.2 cents right up to this fat liquidity wall, which will act like this is at 5.4 cents, and that'll act like a huge backstop, so that if there's people that want to accumulate, we're talking like big players, they can accumulate inside of this big block of liquidity between 3.2 cents and 5.4 cents. I know that's a big range, but it gives whales a chance to come in and unload with millions of dollars to support price, take that liquid hex off the market and lock it up, and then that creates another shortage of new supply coming in, because once these sellers are out, they're going to be out, and like that's what this whole bear market's been, has been a changing of the guard, so to speak. And I can show you what I mean here on this price chart. So if we go back and we look at, I always like to pull up the Hex versus Bitcoin chart, because it's basically like the God chart, so to speak. Bitcoin is the best performing asset of all time. The founder of Hex, Richard Hart, has said that he wants to create the best performing asset of all time. So what would you go to as a metric to compare your asset to? You compare it to Bitcoin, right? And so when the price of Bitcoin goes, or I'm sorry, when the price of Hex goes up against Bitcoin here during this first impulse, people made so much money that they were selling tens of billions of coins to the hands of the many. So like maybe there was 10,000 or 20,000 people that got in early, and they rode this up for this massive return of thousands of %. And then they're like, okay, this is good enough for me. But all of these big green candles got a lot of new eyes and interest on Hex. And they're like, okay, well, now we want to start accumulating Hex. So what happens is the profit takers sell down the price, and they, from like a few thousand guys, they sell their coins to maybe 10,000 or 20,000 guys. So these tens of billions of Hex gets redistributed from the few hands to the many. And what that does is it lays the runway for the next bull market cycle, where we get that second impulse and we get another 8,000% run up. And then again, the profits were so good and so juicy, and people were so over leveraged, taking credit card debt or doing this or doing that to get exposure to Hex when it's going up like crazy, that they need to sell. And this whole period here is people selling their coins either at a loss because they're forced to sell, or selling in profit, mad profit. And so what this does is this big run up again on that second impulse, it convinced everybody that, oh, Hex is awesome. So what happens is now you have like 20 or 30,000 people selling hundreds of millions now, because now remember, the price went up a lot. So you only have to sell hundreds of millions now, no longer tens of billions, to make the same effect on the price chart, because the price is now 8,000% higher, right? So what happens is now you're selling out a function of less amounts of supply from a few more hands into many, many more hands. So now there's like 50,000 or 60,000 people buying these dips along the way, and only maybe 10,000 people selling, or 20,000 people selling into those hands. So you're just redistributing a lot of Hex from a few guys into a little bit of Hex for a lot of hands. And that's basically what this is happening. So what this has all done now over the last, 3 years since Hex launched, was it set up for the third wave. And right now, where we saw Impulse 1, Impulse 2, we're setting up for Impulse 3. And this is going to be the next big run up on Hex, where you have the outrage marketing from Richard Hart, the launch of Pulse Chain, a documentary in the works. You can name all the different bullish fundamentals, the Metcalfe's law, the community's growing. There's still that underlying yield that's been printing flawlessly for 3 years. All of these factors are compounding to give Hex a reason to move higher on a shortage of coins. So any short-term retracement we're going to look at in a second should be met with buying. And when you come back down here to test these levels, they're going to hold in the same way that they held back here, and then in the same way they held back here. And that'll be a floor price that will hold forever. And then you're going to go make higher moves, break all-time highs. Not many altcoins can do this to Bitcoin. Only Hex can do this to Bitcoin.
Yeah. Now you mentioned on the last chart that the chart before we were looking at, it was another Hex chart. I'm not sure if it was weekly, possibly. Yeah, this one. And you kind of identified what you feel is the bottom, right? What is it? Is it just based on your trend lines? What goes into your thought process in determining that we have reached the bottom?
Okay. Well, one of the ways that I personally determine this is by looking at the historical volatility. So this is the all-time hex chart in yellow, and the blue line is volatility. So what volatility is just when there's an injection of liquidity and a huge price rise or a huge price decline that's abnormal relative to the regular price action. So anytime you see these huge spikes on this blue line, it means that a ton of money either came into the system or a ton of money came out of the system, like back here. And so if you look at this blue line, you can notice that almost never did you break this 1.0 line. I'm circling it here on the left side of the screen. This is like your 1.0. This is your baseline. Even if you did break it for short periods, you always went back up and recovered quickly. But in the case of October of this last year, the price of HEX stayed flat between 3.1 cents and 3.3 cents. And that was when you actually broke that line and volatility went down to nothing because there was no volatility. The price was basically a freaking stable coin for like 30 or 40 days. And it wasn't until the God whale stepped in and pumped the price 2 cents in 2 days with $4 million that he caused the volatility to rapidly increase and regain structure over the top of that 1.0 line. And so even though the price did make a new low after that point, the volatility actually made a higher low. So in technical analysis, when you see an indicator make a low and then you see the indicator make a higher low or like a reversal, meaning this line didn't come down to this level and do a double bottom or didn't meet or exceed this value here of a 0.4, in this case it was a 0.41. As long as it doesn't, the blue line doesn't come back down to this level or go lower, that's bullish, right? Because you're making a higher low. So in technical analysis terms, you look for higher highs and higher lows in bullish environments, and you look for lower lows and lower highs in bearish environments. And you have to define those over the time frame you're looking at. So if you're seeing a higher high on a really long time frame, that's a lot stronger of a signal than seeing a higher high on like a 1 minute chart, right? And I'll show you what I mean, because I know this can be a lot of information. But let's look at like the hex chart, and we'll look at like a 15 minute. So I'm going to delete out all the lines so we can really kind of see this a lot more clearly. Let's go back here. See how the price made a breakout here? So meaning the price went down, stabilized, and then tested this downtrend line and then broke out. Is that clear?
Mm-hmm.
Well, it made a higher high, a higher high, a higher high, a higher high, and discounting the wicks, remember? Because all that matters in charting is candle closes. So remember, like where the candle opens and closes, that's where you're looking for price action. That's key levels, not these wicks. These wicks are just limit orders getting hit and people FOMOing in, okay? So maybe remember when you're measuring things, measure from the candle bodies, which would be like where the color is. Though any of the wick would just be the line. So you're making higher highs. This looks like bullish price action, probably, right? Because you continuing to go up, and not until you fast forward a little bit, and now you start making lower highs. So this is like, oh shit, you're making lower highs. This is probably bearish, right?
Mm-hmm.
Well, you have to draw the line, the trend line. You know, you came up, you did a one line here, you came up, you tested that level, you tested it a second time, you tested it a third time. And this, because we're looking at 15-minute candles, this isn't a lot of time, so it doesn't have that much forbearance. Like it doesn't matter as much because there is a lot of things that happens in the smaller time frames that does not represent the overall trend, which is why you'll see me oftentimes only use monthly, weekly, or daily charts, is because these little time frames, things can go up and down rapidly on this low liquidity. So look, you can see here we had a fake out breakdown, and then all of a sudden a crazy rally almost out of nowhere, right?
Mm-hmm.
And so that's because we're looking at too small of a time frame. So when I'm looking at charts, you know, it can get complex. You know, there's a lot of layers to this stuff, and that's why I'll like zoom out and I'll look at like a daily, and just generally try to like see, did we hold trend? So like, why did we bottom, or how did we bottom, or how did I know? I know because on the historical volatility here, we made a low, and we made a higher low, which is bullish. And this is on a 28-day time frame. So I have like roughly a month. So monthly is going to hold a lot more weight than a daily.
Absolutely. Yeah, for sure.
And then to that point, then again with the trend here, as long as Hex holds this trend, we're good. That means that
Yeah.
price can come all the way back down to here, and we're still, looking pretty good.
So when you're looking at this newly established trend line and you're wanting to get more exposure to Hex, are you waiting to see if you can get close to this line? Is that like a buy signal? Hey, we're getting closer and closer to this trend line. This is the time to come in.
That's a great question. One thing I will tell you is sometimes you don't want to wait forever, and it'd be smarter to say, I have $1,000 of money I can invest in Hex that I want to put in that won't affect me if I lose it tomorrow, right? And I'm looking at doing this for a little while, so I would like the dollar cost average in is probably the best strategy. And so waiting to dump the whole $1,000 in right there, well, what happens if that never comes? What if we hold support here where there was a lot of support before, right? You saw the candle went below but wicked back up and the price rose off that level. Well, what happens if you come to test this line, you get a wick down to here and then it bounces back out? Well, then you missed out and you didn't get it. Now you have to buy higher. So a
Yeah.
lot of times with this, you want to just think of it more like small purchases, maybe you split your amount that you want to put in, split it into 2 or 3 batches,
Mhm.
and then maybe you'll buy this level of support, and then maybe you'll buy this level of support here. And then, if you get a breakdown from there, maybe you like that's where it's like this is where another whole layer of the analysis comes in. But maybe like these are your 2 key levels is where you held support here, where you held support here. Maybe you use this level as your 3rd line of support. Right? So then if you do believe in this for the long term, that's how you're going to want to look at this is to do batch purchases, DCAs in over time. Because you could spend, 2 weeks working your way down to here.
Right.
And then all of a sudden in like 3 days, you're back up and you're at 10 cents because that's how this thing moves. Look how long you spent here trading this way. This was about, let's see here. You spent 33 days doing 65%. Then you spent another 28 days doing 187%. But the majority of the gains was made in 8 days, 90%.
Mm-hmm.
Right? So it might take, the more bullish the trend, the longer it takes the price to slip.
Yeah.
Right? And so I remind you guys, like, come in with batches and look for typical support and resistance. And again, remember I said support, once support breaks, let's say price comes down to test this support here, breaks below, comes back up to test. If it can't get back above and breaks back down, your next level is here, where the confluence of lines of the yellow and the purple combine, where this was support once before. And that, so then your price target there on this lower bound is 4.4 cents, and your price target here on the upper bound is 5.8 cents. So you take this analysis, and it's important to combine it with the liquidity analysis. Again, remember the thickest bands is at 5.4 cents. You got another set of bands here at 4.25 cents, and the biggest set of bands is somewhere around 3.8 cents. So I personally don't think you're going to break all the way through this brick. I think this brick is going to act as a massive accumulation range between, 3 and 5.5 cents, right? Basically, if you do get into there, I anticipate that those prices will be supported because I do believe this is a bullish year for cryptocurrency.
Mm-hmm. Yeah. So if we're looking at that bigger picture, right, that this could potentially be the start of the newest bull run, the next cycle, right? Where is I'd say like the point at which you kind of hold back, like you're DCAing, you're new to this crypto space, you want to make the most impact out of this bull run, but at some point you have to stop buying and begin to look at profit taking.
Mm-hmm. So in my opinion, it's I believe in Hex for the long term, and I'm not a seller of Hex on a long, like on again looking at the 4-year cycle of Bitcoin, that basically has us peaking sometime between 2025 and 2026 on Bitcoin. So I'm assuming based on past performance that's roughly the time frame when Hex will be done moving, but that's going to be long after you break that all-time high. So if I'm just like a long-term visionary here and I'm a long-term investor, I'm not looking to sell Hex until it breaks the all-time high, right?
Yeah.
And usually what happens is when you do finally break it, you get an expansion wave that comes off that, where a whole new class of investors comes in to chase price up a lot higher. That's called dumb money or retail money that comes in to chase the price up. And you have, at the same time, you have whales trying to accumulate and like long-term Hex believers accumulating. So everybody's really trying to accumulate the all-time high. And that's often why you see these huge explosions off those levels. And like we did back here in on the price chart. This goes back to, you know, you had that first explosive wave, then you had an accumulation sideways for like the 9 months, and then you had the second wave. So if you replay the same move again, you're going to have an explosive wave here leading into a pulse chain mainnet, a sideways accumulation range, and then that second wave. And so I'm only really interested in selling, you know, later in 25, right?
Right.
As you're going into the end of that bull run.
And accumulating through the sideways. And what is that range that you're thinking that sideways action occurs at, around the old all-time high?
Yeah, because to think about it like this, if mainnet launches on Pulse Chain, people are going to be dividing their economic energy up amongst all these other new tokens. And so there's going to be a lot of profit taking and shifting and reallocating of positions, and new players coming in to accumulate their own positions. So I would say that's probably a safe bet.
Yeah.
No guarantees, of course. You can't hold me to it, because these aren't markets and they can do whatever they want. But a lot of my analysis looks at longer time frames and looks at the possibilities. You know, I'll compare Hex to Ethereum or Hex to Bitcoin, and I know one chart that does that really well is on look into hex.com. Shout out to Gerardo. Shout out to Wave3 for giving him that URL many years ago. Some old Hex lore. I'll basically take down these other pairs and we'll just look at Bitcoin, ETH, and Hex. You can see Hex overperformed Bitcoin and Hex in pink, Bitcoin in blue, Ethereum in green. Hex overperformed Bitcoin its first cycle. It overperformed Ethereum's first cycle. And now here we are again. Hex is peeking its head above, you know, some of these key levels here where Ethereum broke down from. And so this in Bitcoin terms, you're in this general zone right here. And look at how much more room we have to run leading into the bull run. And I have a chart there for that, if I can find it. Basically this one here, which has, you know, if this plays out similarly to that cycle, you know, either sooner or later, you know, you could be seeing $1 to $3 Hex this cycle. For like, that's almost like a baked in. You know, a lot of the fib targets are sitting around that $1.25 to $1.50 on the low end to like $3 to $4 on the high end, before you even potentially get that really speculative run that can really see prices go bananas.
Yeah. I feel like you kind of already, you know, spoke to this. He's saying, should he start DCAing out at 18 cents? Like really until Hex gets to its old all-time high is kind of what you were saying, is that we still have more growth potential after that. So 18 cents may be a little early.
You'd be selling. Think of it like this: there's so many institutional grade investors that want exposure to Pulse Chain and Hex that can't bring in tens of millions or 20 of millions to at this point, because there's not enough supply for sale. Again, for example, if you brought in $20 million right now, you'd move the price up 70%, and you'd only get 85 million of that 115 million. So it wouldn't be an economically smart decision for somebody to market buy $20 million of Hex off the market. And I know, you know, a friend of a friend's, like there's multiple that want to bring in that kind of economic energy in, but they just can't get enough of the supply. So they're waiting for the price to come back down to put in 100 grand per buy, or put in $1 million per buy. And they have to, every time they do that, that absorbs more of that 115 million supply. And so what you end up happening is a scarcity thing. So those of us OGs that are willing to sell at 20 and 30 and 40 cents, you're basically giving something that's worth a lot more price in the future away for pennies to people that are going to take that, accumulate it at the new ranges, like 20, 40, 50 cents, right? I leave big ranges, big gaps, because we can't know how high this move goes until like, because with the pulse chain element, because we just can't know
Yeah.
how much adoption we're going to have or how much demand we're going to have. But we can know that based on here, the buyers have outnumbered the sellers for about 5 to 6 months already. And like it's on a daily basis, you're seeing 300 to 400 buys to like 200, 250 sells. And that's like consistent, like on a daily basis on the HEX USDC pair. And the same thing is happening on the HEX versus ETH pair. You see over here, there's 436 buys to 257 sells. This is legit distribution happening before our eyes. And so just, there's obviously going to be some profit taking that occurs on the way back up to all-time high, which can create short sideways patterns. A lot of times they end up in the form of a triangle. So this would be like a triangle where you do this kind of a pattern. And then there's a breakout. And then you do a bull flag and then a breakout. And right now it looks like we're doing another bull flag. And then perhaps we'll get some recovery here, a retest and resumption off those levels, and we'll break out against Ethereum.
Yeah.
And if you want more information on this, it's actually, I have a resource library available for everybody. If you go to accesslive.com /resource-library, or just go up to the nav bar here and click resources. I have these technical patterns under technical analysis, and this is continuing to be built out. So here, if I click on flags and pennants, you can see that this is a pattern that's occurred in the HEX chart right here. You can see that you have this flagpole and then a sideways chop where prices decline, and then the price moves up above the top of the flagpole, tests, and resumes. So let's find it in the chart. Let's find it right now. I'll go to a 4-hour chart, and I'm going to draw for you guys. This might just look like mania to you, but maybe it won't. Let me pull out a channel. One way to determine fair value is to look at channels. So you can see the price traded inside of this channel. That's a bull flag. And then you had price support, a breakout, a retest, and a resumption off that level, and you made a new high. So this is textbook bull flagging. This is a bullish pattern, and you can learn more about that on my website.
Yeah. This Access Alive website, .com, I've been to it. It is such a wealth of information and knowledge. So anybody that has not been to it already, you should definitely go over there and subscribe so you can get notifications of his new posts and all of this great information that he has made available. I know that you have both free and paid services, and the paid services are, I've heard from multiple sources, are well worth the funds. So I don't know if you just want to discuss those options if people want more in-depth information.
Yeah, so I'm basically doing daily analysis, right? And so what that ends up looking like for paid members is chart sets, right? And I post these chart sets, and inside of them, you get this kind of content where you get projections on the Bitcoin fractal, you get like, long form, you get a lot of context to explain what this chart's trying to say about the dollar. Whenever the dollar falls, crypto goes into a bull run. Well, right now, the dollar's looking weaker and weaker and looking like it's going to set up for a second leg down. And so not only do you get the chart sets with all the data in them, but then I also come back and we do a monthly Ask Me Anything in the Telegram, the boardroom Telegram voice chat, where you can ask me questions directly, and that we all get together and we just do like a roundtable discussion. And I actually hosted my first one on Friday, and it went really well, and it was awesome to be challenged to come up with proper responses to a lot of really, really good questions. So shout out to my guys that's in the private Telegram group. And on top of that, we have a private video section where on Monday nights I go live for the private guys only, and then I have these private video sessions where we really go into really deep conversations on the global markets. We talk about every single angle of the market so that we can watch the money flows between like bonds, precious metals, stock market, forex markets, cryptocurrency, and we can try to find out, well, where's the money moving and why, right? Because if we can figure that out, we can try to time up longer term price action, and we can be more accurate with our swing trades on like a longer or shorter time frame. In addition to that, I will just give the context that I am like almost fully staked with HEX. A lot of my economic energy is in HEX because I'm a long-term believer of it. And even though I watch the markets and analyze and do take occasional trades, I'm not taking very many trades per year. I just want to know exactly where the market's headed over a 5 or 10 year period. And so I share that information for paid members. And on top of that, I do blog posts, and this is regular. I'm doing these once a week roughly. And inside of these, I'm giving away some of my best alpha. Like some of my best data I'm going and putting in here, because not only does it help me, but it helps the market grow and get smarter. So that they're not, like, for example, I talked about this shark in the last, the one I wrote on March 5th. I talked about this shark that turned $37,000 into $12.5 million. And he has sitting currently on like roughly $6 million of HEX. And we look at the potential downside if he was to market sell at all, because he typically, he's done nothing ever but sell HEX. And so, you know, we want to know where the price could go if the downside's there. And this is all available on my blog. And that's available to any subscriber. Talk about liquidity, market supply, run some data, and then even look at, like, you know, what does the economy look like on pre-election years before a U.S. presidential election? Well, typically, you can see here, if you read this, out of 83% of the time, out of 72 years of data, if you have a strong January and it's a pre-election year, you're looking for upside for that year on risk. That means cryptocurrency and stocks. Again, and then this is more bullish data coming in on correlations between the S&P on different time frames. So out of 3 out of these 4 scenarios, the S&P rallied higher going throughout the year, right? And so Bitcoin is somewhat correlated to the S&P. If the S&P is doing good, so is Bitcoin, and vice versa. And if Bitcoin's doing good, you know HEX is doing 10 times as good. So make sure you guys check this stuff out. I love posting it. It helps me grow and evolve and learn. And I love it, getting questions on Twitter too. I'll tweet out, like, you know, what's some things that you could know to help you make you more successful. And so feel free to send me messages of that. And then if you are interested in the paid products, there's a classroom which I'm updating. I'm working on a charting 101, like, actual course. And then I have a HEX derivatives course coming from Crypto Sloth. We're working on that together. So it's a slideshow combined with video, complementary video content. And then under plans and services, you can find the different membership tiers depending on what you're looking for. So yeah, please feel free to go check that stuff out. If you just want to do a one-time one-on-one, I've had a few of those come in now, and there's a lot of people that are sitting there wondering, like, what to do with their pulse chain strategy. That's been a lot of the talk lately, and like how to try to play this bull run properly under different conditions. You know, everyone's in a different position, so I feel like I've helped them pretty well with that. So yeah, thank you for giving me the time to kind of share that information.
Oh, absolutely. You've been such a wealth of information. We've like already almost got to the hour point. But, you know, I mentioned that I typically like to do this segment. Do we still have time to run it real quick?
Oh boy, here we go. Under the gun.
All right, let me get my window up. I'm so slow. I should already have this up. But for any of you guys, and I'm sure there's a lot of you guys that are new to this show, Axis brings out all the people to hear all that great alpha. I typically like to do this little truth or dare challenge with my guests, just something for a little bit of fun to see if they want to share any in-depth crypto secrets. So we're going to play truth or dare. If for whatever reason Axis decides that he wants to opt out of the truth or the dare, then he will be sending $50 of the crypto of his choice to one of our viewers in the audience. But I have a feeling that he's going to be game for it. You ready?
I can't be giving up that precious crypto, so I guess I'm locked in.
Let's see what we get. Oh, come on with the dare.
Oh,
where is it? Oh, it's there. It's there.
Oh, shit.
That's where it gets.
All right, now my heart's racing. I'm getting a little nervous.
Yeah, last time Crypto Heartbeat had to dance with no music on.
Oh boy,
that was a good time.
Post a pulse chain launch date off Twitter. Okay. Oh god, this is so bad. All right. I don't know if this is going to be good enough, but we're about to post it. I'm going to link in the stream too.
Absolutely.
Let's see here. Hold on. All right.
Oh, that's a great one for you.
I hate doing these. I hate posting forward-looking statements like this because it's so not me. But all right, I guess I'm locked in. All right, tweet. I posted the link to the video.
Yes, absolutely,
All
guys.
right.
So
Prefacing, I got dared to do this.
that totally kills it, but I'm gonna let you make it because I know how much people are like on your every word, right? Like, man, we've had that before. I'm gonna tell a little story about when we were on tour. Avid made a post chain prediction, and it was extremely speculative. There was some things that Richard had tweeted that a lot of people in the community just like read way too far into it. And so, Avid's a meme guy, so he thought it'd be funny for him to just go ahead and throw a little statement out there. And I tell you, he'll never do it again. I think Avid would have chose to send that $50 out. Oh. So, but yeah, all in good fun. Thanks for doing that. And then post that link in the chat if you can, or in the private chat, and then I'll post it. So my final question that I typically always ask everybody, and it's not financial advice, it's more so just, you coming in with open eyes saying, I'm aware of post chain launching. I know that, if I had access to more money, then I'd want to position myself in a way to benefit off of the copy. And then we have more than just Hex as far as an option for buying with it and still being in support of our ecosystem, right? You have all the perpetuals, you have Hedron, you have Icosa. If you're looking at, bringing anywhere from like $200 to $500 in, what coin are you kind of eyeballing considering what the charts are saying and everything like that?
What's my time frame? Like, is this post launch or pre-launch?
Pre-launch. So like between now and the next, before V3 potentially.
Well, if it's me and I'm deciding what I want to buy right now, I'm looking to buy Hex at between 4 and 5 cents on a pullback.
Okay.
And if I'm taking on a little bit more risk, I'm actually buying Hedron.
I like it. I like it a lot. What about the derivatives? Any thoughts on those? I know that I kind of looked into it yesterday that Deci was at like an even better discount than Lucky, which to me kind of surprises me, just because it's a longer stake, so it has more T-shares attached to each hex. And so I kind of saw that as potentially a good opportunity to come in, especially for somebody that's new, that doesn't already have any exposure to staking, any Hex, Hedron, or anything like that.
Yeah, I want to show you an example of something that's actually going on in the real economy to try to explain this relationship of why the shorter term perps are more either at parity or more expensive than a Hex versus the longer term. So what this is called is the yield curve in the bond market. So when you buy a U.S. Treasury bond, it gives you a payout, right? It's like a percentage of on an annual basis. So if you pull up this screen here, yep, you got it. So if you buy a 1 month bond, you lock your money up for 1 month, you buy this bond, you're going to make 4.75%. If you lock it up for 6 months, you're going to make 5.2%, so even more. But all of a sudden, you start putting it out for a year, it's less. 2 years, it's less. 3 years, it's less. 5 years, it's less. And if you go out here, that you can see that it doesn't make a lot of sense, because it's like if you're committing your money for longer and longer, you should get paid more, right? That's how Hex works. But in the case of the bond market right now, it's actually inverted. And so you're actually seeing the mindset of the markets right now. They're saying that we are short-term minded, instant gratification. We want the high yield now. We don't give a crap about, we don't believe in the U.S. government long-term, or we don't believe in the Federal Reserve long-term for their ability to control inflation and control the money supply in a proper way. So this is an inverted yield curve. This is not healthy. Technically a healthy yield curve, we'd go back to 2019, and you can see here, it looks completely different. The short-term yields of like a 1 year a 1 month and a 3 month are sitting at 2.4%, and then like a 5-year was giving you 2.5%, and like a 30-year note was giving you 3%. So what's happening in the Maximus perps right now is the same effect, where the longer term, exclude Maxi from this analysis. Deci, the 10-year, it's at a 20% discount. Lucky's at like a 9% discount. Trio's at a 3% premium. Base is at like a 3% premium. And so the shorter term ones like Base and Trio are locking in parity of Hex better because those stakes are coming up sooner, and they'll be more valuable. They'll be redeemable for the Hex plus the interest sooner. So they can't, there's not as much time delay between the actual valuation of the underlying Hex plus interest as there is with these 7 and 10 years, right? And so you have an effective inverted yield curve of the perpetuals right now, which is screaming opportunity for people that want to get Deci and Lucky on a discount, because you can lock in T-shares for 20% less if you buy Deci right now, right?
Yeah.
So I see this as an opportunity, and the leading indicator to me is Lucky, and I'm going to draw on this now. You can see Lucky had a nice run up here, right? And it was at it was hugely discounted. It was almost 25% off, and all of a sudden you had a rip up to only 4% off of what would be a parity with Hex. And so, to me, this is saying that there are people looking to accumulate these things now, and I see this as being the beginnings of that yield curve reverting back to more fair valuation. And to top it all off, if you do take advantage of any of these deals, when the bull run comes, you can fully expect these things to go on nasty speculative bull runs. Once Hex tops off at $1, $3, $5, $10 and goes sideways or breaks down, people in Hex are going to run to whatever is going up. Whatever the green candle is, they're going to chase it. And these perps being on low liquidity, they're going to freaking rip. Mark my word.
Yeah. So then I think that this conversation has been exactly what I needed, because yesterday on stream I said that I think that I'm going to be picking up some Deci for my educational wallet. And, this is for the purposes of education. So not at all looking to trade or, get out anytime soon. I'm prepared to hold it through the 10-year period. And to me, I like discounted T-shares. That's why I also like the HSI auctions. But yeah, I'm liking what you're saying.
I would say that you could also apply that same theory to Hedron. When Hedron is super discounted relative to T-shares, you can convert that Hedron for T-shares in the HSI auction pools at a discount, because the amount of Hedron that it costs to purchase in dollar terms comes down when Hedron price is down. So you can go accumulate Hedron for cheap, and then use that Hedron that you just got for cheap to get T-shares for cheap. And so there's an opportunity there to effectively see the same relationship, which is discounted T-shares. Yep, all of these perps derivatives are giving you discounted T-shares right now as we come out of the bear market.
Absolutely. Well, thank you again for coming and being a part of the show today. I look forward to seeing you pretty soon in April on the Hex Cruise. We're going to have a great time. See if I can talk you into doing another little charting session, maybe on the boat.
All right.
That would be awesome. We do plan on doing a live stream of our educational session and another live stream of our Hexi Awards. So, yeah.
Vote for me. Oh.
Yeah, you know that you deserve best, Alpha. You got my vote.
I appreciate it.
Absolutely. So if there's any last words, I know that the people can find you on Twitter, X is Alive, and of course at xisalive.com. Anything else you want to share? And then I'll end the stream.
Just, wishing you all the best of luck with your accumulation. Again, Crypto Spring is here. Things are looking good for this year for cryptocurrency. The dollar is going to sputter and break down, and it's going to be glorious for those of us that can see the future and are ahead of this on tech. So, best wishes to everybody out there and everyone in the chat. Thanks for all the support. I really appreciate you guys, and we'll see you soon. Thank you, BlaKc HEXican, for inviting me on.
All right. See you guys next time. Tomorrow I'll be on with Crypto Kool-Aid. We're going to dive into some topics in NFTs and gaming. And then the rest of the week, every day, I'm here at the same time, 12 p.m. Pacific Standard Time. Thanks for joining. We'll see you next time.
See you guys.